The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen. Thank you for being with me this evening. My name is John Needham, and as usual, I will be your host for today. Would somebody kindly type in the question box that you can hear me all right, that our amazing electronic systems are actually working? If you would be so kind, someone type in the question box that you can hear me. There we are, wonderful. Oh, Melissa, how wonderful. Glad to have you with us, Melissa. We have very few lady members at the Danielcode, which is a shame, because in other parts of the world, it's really a feminine-oriented business. Japan, for example, which is really the home of Forex, lady traders are far dominant to their masculine equivalent. So glad to have you with us, Melissa, and I hope you're enjoying life in Queensland. I think you're in Queensland. It's not warmer up here, isn't it? Very nice. Okay, so Dr. Michael's with us, and there's a lot of static. Okay, nothing I can do about that, Michael. Unfortunately, there are about 270 hops on the internet between where I am and where you are. And there's potential for static on every one of those. So I'm sorry for that, but I can't do anything about it. But grand to have you with us, my friend. That's great. Dr. Michael, incidentally, came to a Danielcode tutorial way back many years ago, and he's a very, very keen trader. He's also got an incredibly analytical mind, and he's doing his TTT tutorial now. Okay, so Michael, yes, another Michael, yeah, can hear, static noted, right, good. Okay, that's it. Thanks, Michael, and the other Michael. Okay, so David's with us, Lottie, Lockie, I should say. Welcome again, my friend. I hope you're having a lovely day. Florian's with us, which is great. Greg Palladini's with us. Boy, you can tell I'm acutely aware, folks, that tomorrow is US Independence Day. And a whole lot of people, including a large number of traders, have closed up shop already, and they're taking the long weekend. But glad to have you with us, Greg, of course. Julian's with us. He's done so much to help all of us with his research on market. Quite wonderful. Let's see what I'm getting here. So that's good. That's him. That's great. And let's have a look up here. So, right, start at the beginning, mister. Right. Sean's with us in Adelaide. Glad to have you with us, mate. Peter Mack is not a day trader. Is with us. Mike, Mike over in New Zealand. Wonderful, mate. Have you with us, all the Michaels. Melissa, of course, we said hello. Melissa. Mark L., the all-time champion of backtesting. Wonderful to have you with us. He's an absolute stalwart for the Danielcode. Hardly ever misses one of these webinars, which is grand. Mal's with us. Mal's likely to be a new member. Be glad to have you on board, Mal, and do let me know if there's any information you need to get yourself started. Gig's with us over in North Carolina. He's a wonderful supporter, and many others as well. Let's see, Florian, we said Florian, I hope we have. Here we are. Oh, this is a pretty good turnout, folks, considering the day that it is. And Toddy's just arrived. Toddy's in Southern California. He's been a wonderful supporter for the Danielcode. Glad to have you guys. And today we're going to talk about what is and isn't a money machine. And Terry's come up for us today with this wonderful presentation of a what I would call a poker machine. That's what they're called in Australia and New Zealand, and you guys, most of you would call it a slot machine. And the picture there is how many people think about a money machine. You put the money in, you pull the handle, and money comes churning out the bottom. Well, the reality is that poker machines or slot machines, which are ubiquitous, they are everywhere. Not so much in America. There are some states that don't allow them, but in our part of the world, they're literally everywhere, and they're occurred. And they are, in fact, a money machine, but not for you. They're a money machine for the people who own the machine. And that's not the right machine for you, as you'll see as we go along. So, as I say, I'm acutely aware that tomorrow is Independence Day, and I'm most grateful for you who've attended today. Of course, this will be recorded and posted on the website, www.thedanielcode.com. By tomorrow. Terry will handle that. So markets are rational, orderly, and sometimes predictable. I tell you that every webinar, and survival requires strict adherence to the rules. And we're going to see some little bits of drama coming up pretty soon. In America, which is the driving engine of futures markets, the Trump administration had a huge win today with the one big beautiful bill passed and got through the House and now goes to Trump's desk, probably has already, for his signature. And that is a huge achievement for the administration, but it has some pluses and it has some minuses. So before we get into the nitty-gritty, this is new for you. Finance is now available on all of the TTT programs and our masterclass, the two big masterclass programs. They are the ones that are one-on-one personally with me. And we're always aiming to try and make access to our products more available. And that's why we introduced the TTT, where we have parceled up the learning from Danielcode, and it comes in bite-sized chunks now. So happy to offer you all or any of our programs, 60% down of our listed price, which you can see on the website, and I will finance you interest-free for 60 days thereafter. We're certainly presently running a promotion on lesson number 6, that's day trading and trading with angles. That has a 90-day interest-free period on the unpaid balance until Sunday, 6th of July, and then that will revert to a 60-day interest-free. So I hope that's going to help you folks and make these programs even more accessible to you. Well, today is Independence Day. How important, what a marvelous thing it all is. The whole story of America starts with this day back in history, when the Declaration of Independence was adopted by the 13 then colonies that became the inaugural states of the United States. And of course, it's a very, very important holiday in the States, and as I say, I guess a whole lot of traders will make it a long weekend, as you do. So congratulations, and have a wonderful time to our American US clients. Enjoy and be safe. Okay, so you can't open a paper these days without hearing about Trump. He's on the front page everywhere, and there is no doubt that his achievements have been incredible. If someone had told you the story a year ago, you wouldn't have believed it. The changes he's making to America, America's finances, American culture, many other things has been absolutely extraordinary. So whether you love him or hate him, he's a very, very significant president, and he will be noted historically for some of his achievements, which are many. And the one big beautiful bill, which basically encompasses most of his election promises that he's campaigned on and taken to people, looked like it was in terrible trouble at various times. It looked like, with very small margins in both the House and the Senate, how could Republicans stop their eternal arguing and agree almost unanimously which is what it took. There was, the Senate, in fact, was a tied vote, and then the Vice President, who is ex officio the chairman of the Senate, he was called to cast his casting vote, and that got the Senate approval of the bill by, as I said, the one vote, which was advanced, one single vote. Then went back to the House again to adopt or reject the changes that the Senate had made, and that looked very, very difficult for a while, with the Freedom Caucus vowing to stand their ground and oppose the massive, and it's trillions of dollars increased debt that this bill authorises the country to take on. But they got it through. Amazing perseverance, charisma, probably some veiled threats, all of the above. The life of politics. So, and Trump's done some really good things. He's had some really good common sense ideas, getting away from all this DEI nonsense. Men pretending to be women, and men playing women's sport. He just put a hammer right down on all of that, and it got ridiculous. You wonder how much of it's real, given that papers and broadcasters and news people generally are obliged to take something that's a bit controversial. But some of this nonsense with the DEI, I mean, the guys are literally men wearing women's clothes for the vast majority. In fact, all of them. You can't be born a man and become a woman. You can have all of the trans tricks and opportunities and procedures, but it doesn't make you a woman. So that just seemed to be so common sense. And this idea of men pretending to be women and competing in women's sport, I mean, it was hard to understand how that ever got started. It was just so totally ridiculous. And we had the dreadful appearance at the Olympics, you'll recall, of the boxers who were men masquerading as women. And I know that they're XX chromosome or XY, I don't know how they pronounce it, but they have some chromosomal imbalance. And some of the boxing contestants, and indeed before the last Olympics, some of the runners, the distance runners, have this unfortunate position where they have hormones and effectively bits of the male inside their bodies. Don't want to go into that, other than to say that it's tough for those folks, but you can't ruin a whole competitive sport for the sake of being politically correct. Total rubbish. So, massive amounts of money in that bill for immigration, quite extraordinary amounts of money, and it's been a huge issue with the American public. The problem is that it's a very emotional issue for many people who have friends or relatives, whatever, who are not on the right side of the immigration law, but the method of it being done is pretty tough, and it's certainly upsetting a lot of people. So the 9th of July rolls on, folks, which is the day that Trump's going to make his next announcement about tariffs. They were brought out, as you know, and declared to be on foot. Then when the bond market looked like it was going to tip over, everyone, including Trump, got scared and said 90-day extension. Well, what's going to happen on the 9th of July? Nobody knows, but it's likely. I think that the 90-day pause will be extended. The negotiations are going on between the US and a great number of other countries about trying to get a better deal for the US on tariffs, what Trump perceives as a fairer deal. And I've got all sorts of concerns about that. I mean, Basic economics 101 starts off by telling you that tariffs are a tax. They're a tax on the people who finish up going the end purchases of imported goods. And the traditional method of tariff is to protect particular industries. And we've seen that over the years. I can remember Australia had footwear tariffs for years and years. And I had a company called NAM, North Australian Rubber Mills, and we had been a footwear manufacturer, and the company had gone broke over it. I bought it from the liquidators for not much, and then we had tariffs for years and years on footwear, with the government aware that the footwear industry in Australia, such as it was, it's all gone now, such as it was a big employer of labour, and that's always the basic answer for protecting a particular specific industry. Well, the US tariffs have come in two versions. One is product specific, like cars and steel, and I understand that, I get that. I'm not really across whether it's prudent or whether it's deserved, but that's not for me to say. That's entirely up to the administration. But people understand that. What people don't understand is this tariff on other being used as a tool to extract other benefits and undertakings, some of which are clearly political, and that's causing some problems. So the automobile, steel and aluminium tariffs, I get that. Australia is a pretty big exporter of steel and particularly aluminium to the US, and is hoping that, as we're such good friends historically with the US, this lame-brain government we've got, the Labor Party, which is the equivalent of the Democrats, but I think with even more socialist bent, our government is completely hopeless. And our Prime Minister, Anthony Albanese, has not yet even had a visit with Trump. So he's way down the pecking order. And what's driving a lot of that is that well, Kevin Rudd, who at one time was Prime Minister of Australia and a Labor Party stalwart, of course the Labor Party, all political parties do it, they look after their mates. Kevin had a couple of terms in 1.5 terms, I think, in office, and was then kicked out and was sitting around making a nuisance of himself with not enough to do. And all his good mates in the Labor Party said, this would be great, we'll send Kevin over to the US as ambassador. And he's a China-phile, he's a great admirer of all things Chinese, he speaks Mandarin fluently, he was an ambassador to China for this country. And apart from that, I don't think I can say the word in polite company, but I have had the misfortune of knowing him for many, many years, and I really believe the world would be a better place had he never arrived. Nonetheless, the tariff business goes on, and the results that are coming out are being announced, leaked very selectively. But what's going to rule it all is the deals with the big economies: China, Europe, India. India is negotiating at the moment. China, it's been announced they have a deal with China. It's not a deal, it's simply a standstill agreement to ensure that rare earths continue to be exported from China to the States, basically. Europe, of course, is a different kettle of fish altogether. Europe has considerable pride in their situation as the Eurozone, the sort of all countries together under the Europe banner to some extent, and they have very firm rules and ideas. They've got a massive bureaucracy running Europe, and they're not going to change some of those. And there's going to become some really serious pressure points between the US and Europe. So keep an eye out for that. What happens with China? Another unknown, but they've handled it pretty well so far. China has handled it pretty well so far. For the rest of the world, and particularly the States, on the eve before Independence Day, US equities are at all-time highs. How's America going? Well, how's the stock market going? All-time highs, record highs, wonderful highs. In fact, equities haven't seen a sell signal for 14 days. That's been elected. They just go on and on and on. Let me see who's here. Yes, sorry, Jim, I've just had a note from you. You've got problems with static. So has everyone today for some reason, Jim. And it's not coming for our end, but I hope you'll persevere and stay with us. So at the last line on this page is beggar thy neighbour. And if you're a younger person, you probably haven't heard that expression before. But basically, it's a description of tariffs, amongst other things, that you bring in rules, basically, that will favour your own country economically, perhaps a bit more than economically, and you dump the load of that on your neighbour. It used to be a expression in my younger days used generally other than just economics, and the play on it is that you've got the contrast between beggar and neighbour. Beggar, of course, is a bad thing. You're impoverishing whoever you're imposing this on, but that person's your neighbour, and in general terms, you want to have good results, have good relationships with your neighbour, don't you? So this is a real beggar thy neighbour. And that is consistent with the Trump administration's view of the world. They are for America and only for America. And you can't criticize that. Being patriotic is a virtue, is it not? So here we are. Money machine. Let's moving on. Our banner for today's webinar shows a slot machine surrounded by great wealth. Definition: organized games of chance are not money machines, or rather they are not money machines for you, because the odds or the winning percentages, which are vital, they're not the only part of the story. There are others. One of them is bias and design. You see that, for example, in the stock market. The stock market is biased to go up all the time. Companies that fail to perform at a certain level, or whose share price drops below a certain level, they're simply removed and they're replaced by the hot new thing. So if you keep taking out the coldest water at the bottom of a cup and keep adding boiling water at the top, you're going to get that nice flowing left to right increase in your share prices, which is the basis that investing in stocks is sold on. But as well as that, there are huge tax advantages for being invested in stocks that don't apply to other assets. What about accessibility? Well, when we're talking about things like stocks, they're highly accessible. Other methods of what is quite literally gambling are not always so accessible. And all of these arrangements that you have with formalized gambling, some of them can have liquidity problems. But the major point about all organized gambling is you never have a chance of getting paid the correct odds, because the percentages and odds are manipulated in favor of the guy, business, net worth, group, network, etc., that is hosting the arrangement. So if you were to have a bet with your mate and say, I think my team will score first, and you're doing that in an informal way, you would get the true odds of that deal, which are 50-50. One will win, the other won't win. You had the same bet about who would be the first team to score the first touchdown, try, netball, whatever you like. if you do that on an informal basis with your mate, your friend, or colleague, or just someone you know, you'll get the true odds, which is 50-50. For everything else, you will not get the true odds. You will never have a chance at the true odds. And it's that fact that organized wagering is organized so that the house always wins. And you know that theoretically, but maybe you don't know how it's done. For slot machines, which we call poker machines, they're programmed. They will run and spin their dials every time you pull the handle. That's why they're called the one-armed bandit. And but they're programmed to pay out a certain percentage. And by definition, that means that the house percentage is protected from you. Other games of chance roulette, for example, the heist, the guys who own the machine, the house rather, the guys who own the machine, it's got one always, and sometimes more, particular numbers that are for the house. And if that number comes up, everyone loses their money in favour of the house. In blackjack, which is probably the best odds you're ever going to get in anything to do with Vegas or the other gambling capitals all around the world, blackjack has a bias in favour of the house. And there's two ways. The difference between what the dealer pays you at 1.5 and what you pay the dealer 1 is not so much material as the fact that the overriding rule in blackjack and derivatives of it is that the player busts first. In other words, you can bust and the house hasn't even pulled its last card out. So you can go bust, and that is such a bias that even though that's not a hugely significant advantage, it is a notable and solid advantage. Horse racing. People gamble huge amounts of money in horse racing. It's a massive, massive industry. It involves flat racing, trotters and jumpers. Why flat racing? Well, in the winter, for example, in Europe and Britain, the dominant sport is horses jumping hurdles, or steeplechasing when they have much bigger obstacles to get over. As well as that, there's trotters and pacers. Pacers move their near side legs together and their off side legs together. Trotters move diagonally, the normal trotting gait. And greyhounds, huge in this country, not even legal in most states in America, and there are really good reasons for that. But in all that sort of gambling, you're never going to get the true odds. There are primarily two sorts of gambling in those industries. One is with bookmakers where they're legal, and the bookmaker is an individual or corporation more and more these days, huge corporations, but they set the odds that they're prepared to offer you. In other words, they've got handicappers who are better than almost all of you, and us I should put in there, at knowing the real percentage of a particular horse winning. Now, it's not an exact science because all sorts of unforeseen things can happen in a horse race. It can fall at the hurdle or the steeple, as the case is. It can miss the start and run into traffic, be behind a wall of horses because they bunt quite closely. And it doesn't get out. It never gets to run out in the open area. So all those sorts of things can happen. Jockeys can fall off. I've had that happen to one of mine. Well, I guess now it is a long time ago. I was going to say not so long ago. I used to have a lot of racehorses, many racehorses, and broodmares and stallions years and years ago in another life. But you'll never get the correct odds because occasionally there have been people like Don Scott in Australia, and I'm trying to remember the name of the guy in the States who invented speed numbers. years and years ago, and they were quite, how can I put it, they even published speed numbers in US newspapers, form books, etc. I can't remember his name now. I knew him quite well. He was a lovely chap, very clever. And so for a period of time, and Don Scott did the same thing, but he did it on weights. The speed numbers come on times and track conditions and track bias. Very clever, both of them. And they beat the system for a long, long time. But eventually it will catch up, because if you can affect the price at which the punter can get on, you are distorting the odds in your favor. And the assumption is that the bookmaker, proprietor of the business, as the case might be, is better at handicapping than you are. And for almost all instances, that's probably true. So Mike is saying my microphone has gone dead. Folks, has it just gone dead for Mike or for all of you? Somebody please type in the question box if you can still hear me all right. Yes, okay, well Jim can hear me, so it's not just me. Mike, sorry about that. It's no, our gig's over in North Carolina. That's a long way away. He says, no, you're good. Just a bit of static. Great. Okay, Mike's back. Wonderful. So the whole theory of that is that the handicapper knows more than you do, and pretty much that's true. Sports betting is about handicapping. You're not going to get a sports bet that says Team A to beat Team B at even money, which is the correct odds. Handicapping of sports betting is an absolute art form, and they'll publish their position. They'll say Team A by 10 points over 10B. So they're handicapping that result. And again, the guy who's doing the handicapping, he's a full-time professional, and he's better at it than almost anyone. And after bookmakers who are always making their book, in other words, the percentages they're offering are 190 and 120, 130% of the book. They're always offering odds that are so wrong that the balance, the overflow, will come to them. So statistically, over long periods of time, you can't beat the bookmaker unless he's incompetent. The other form of betting in Australia, it's huge, Japan, England, all over the world pretty much, is what's called the totalizer. They have that in America as well. And the totalizer is simply a system where all the bets are pooled, and the pool, first of all, is savaged, and I do mean savaged by the government. It takes out its whack, which is coming from everything that they can possibly negotiate as their justifiable expenses, or if not, sometimes, as in Australia, where it's the social cost has to be borne by the punter. The percentages they take out mean that by definition you can never get your true odds on the totalizer or with the bookmaker. And lotteries, for example, are the big standout. The percentages and the sheer amount of money that's taken out of lotteries to the government as a license fee is absolutely extraordinary. But your chances of winning the lottery are slim to none, more emphasis on the none side, but the amount of money that's taken out before the dividends, results, what have you, are declared, guarantees that you're always taking the wrong odds. So where can we find real odds? Well, as I said, one way is private bet between you and your friend, which team's going to score the goal first, or score the touchdown first, or the try, as the case might be. That's your only chance of getting true odds. You're never going to get true odds in any form of organized gaming, as it's called, because the games are put on for the benefits of the promoters. Okay, it's very clear. And that is something to struggle with. Forex, you may think you'll get the right odds, but you won't. And that's because in Forex, the bid-ask spread is at the discretion of the operator. And I am convinced that some of the worst excesses have been bled out of the system. But years ago, it was dangerously corrupt. And the Forex firms who did the most advertising were the worst proponents of it. And if the bid-ask spread can change to a significant degree, your stops can be hit anywhere, even if the market's never physically traded there. It just gets covered by the bid-ask. So in that issue, and over the years, we've seen many Forex companies go to the wall. So the security of your payout is a big consideration. And remember this in particular. In the United States, Forex is not a security. The Peregrine, PFG, Peregrine Finance Group, they blew up over the usual scam with the owner milking the money and presenting himself as a good guy in the process. And eventually that matter went to a trial against the bank, his bank, PFG's bank, who the liquidators sued them for being negligent. And there's a long story behind that. I'm happy to tell you someday if we get a chance. It's interesting. But all of the people who had futures were covered by the US Securities Act. The Forex traders lost their money cold, all of it. And when they sued the liquidator, he took it to the bankruptcy court. He was appointed to act by the bankruptcy court, of course. And it was held by the US bankruptcy court that Forex is not a security within the meaning of the Securities Act in the US. This was some years ago. And what happened then is that the various regulators took a look at this and said, well, it's pretty hot, this Forex business. We're going to start regulating it. And they brought in some pretty draconian measures of liquidity, compliance, etc. And a huge number of the big Forex brokers in the States, like Gain Capital, they just gave it up. They sold their Forex business, I know, in Australia, literally for $1. So there are no doubt reputable Forex companies, but you do have to be aware of those issues. And of course, a whole lot of those Forex traders have gone over to trading CME currency futures on the CME platform as an alternative. So there's risk everywhere, isn't there? There's risk and more risk. So what about stocks and ETFs? Well, stocks and ETFs have a huge bias in favor of the long side, the buy side. Firstly, in most countries, there are huge tax benefits of investing in stocks. In America, it's called the 401k, most of them. And in Australia, it's New Zealand, it's superannuation, compulsory retirement planning and payment, and all that huge pool of money that's gone into the superannuation fund. The vast majority of them are controlled by mates. The political system has reared its head, and you'll find some of the biggest superannuation firms in Oceania, at least, are controlled by political mates. How much skullduggery goes on? There's always skullduggery, but they are very highly regulated. And stocks, of course, have, as I say, that bias in favour of the long side and the tax benefits. And you've always got this issue of timing, that once you're in stocks, it's all buy and hold, buy and hold, buy and hold. And that might work at various times, but you should also be aware that at various times it won't work. There'll be times when you want your money and the market's not doing very well. So don't kid yourself that you can never lose on stocks. You certainly can. ETFs, of course, are very, very popular, hugely popular, and I've never really understood why. So there's all sorts of profits being taken out of ETFs by the organisers. Management fees, brokerage fees, bid-ask spreads, etc., etc. And the bid-ask is the difference between the buying and the selling price of an ETF. I think the real risk on the ETF is it's dumbed down. Is really futures trading for stupid people. I shouldn't say that. I'll be in strife with some people I know very well who really delight in becoming and being ETF traders. But if you didn't know about futures, it would be understandable that you were trading or investing in ETFs. And what they are basically, pretty well everyone understands buying and selling stocks. You buy, you pay your broker, you can sell when you're ready, and you can have a situation that you can limit the amount of losses. Something like a stop loss order, a certain number you'll have in your head that you've got to get out. The problem is that no one ever puts that number into the market. So when you see things like the 2007 to 2009 crash in the S&P, well before it bottomed out, I can remember a well-known US broker who was a Danielcode client saying, "John," he says, "terrible people are jumping out of buildings. People are gassing themselves in their car with despair because their plan, which is always buy and hold, didn't have an exit strategy, and it just gets to the stage it's so bad, it's just got worse, and they get paralyzed if they're not properly managing their position." So in my view, the biggest problem about ETFs is the real risk and opportunities foregone. If you're putting your money into ETFs, you're trusting in the market to go ever upwards. And the reality, I know it's hard to even believe it right now because markets have been on a one-way street. Go, 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 go for a very long time. They just go up and up and up, don't they? There's a whole generation of people who've never seen a bear market of any consequence. But it's coming, and it's going to be a doozy when it gets here. And it's not that far away now, folks. Not very far away at all. Okay, so futures, in my view, that's the true money machine. Why? First of all, I'm talking about exchange-traded futures. There are all sorts of other futures over the desk type futures and unregulated exchanges. I'm not talking about that. There are some downsides to futures trading. First of all, the lit versus unlit exchanges. A lit exchange is one where you can see it. The CME markets are all lit exchanges. You can see the price movements, you can see the volume, you can see what's happening. But there's an increasing push to unlit exchanges by the big players, by the Goldman Sachs, by the Citadel. And there's some interesting grey areas that have come up because of what I would call lack supervision, but someone else would say response to market requirements. One of the most obvious ones is Robinhood, which is a free platform for traders. So how they make their money is they take all of the retail orders, they offer it free, so they get all the retail buyers, huge numbers of them. They take all those orders, excuse me, and they on-sell them to one of the big players, mainly Citadel. And they're very, very good at it, and they've managed to run the argument that this gives better liquidity for the players. Now, I doubt that very much, but nonetheless, it's been approved. It's been going for years and years now, and doesn't seem to be any great outbreak of agony against it. So the big firms looking for more and more unlit exchanges. In other words, they want to be crossing their trades. The big firms will have buyers and sellers in the same market. And essentially what they're saying is we don't want to take this to the market. We're the broker anyway. We want to just cross these share positions within our own clients. And that's been a big push lately, and it's much bigger than you think it is. It's almost zero publicity. Financial analysts really don't understand a whole lot about markets. Sounds a silly thing to say, but there you are. Bias, incidentally, is not a trend. Two different things. Bias is inherent. It's built into the product. It's the reason why stocks find it much easier to go up than go down, because there's no effective method for retail traders to sell stocks in a down market, or in other words, to short them. You can't short stocks the way you can short futures. Futures is beautiful. You can have a buy and you can have a sell, and it has the same value both ways. In stocks, you can buy them anytime you like, but you can't sell them, because if you want to short them, that means selling something you don't own. So you've got to go and borrow those stocks from someone. Massive amounts of this go on in the big players. You've got to pay whatever the lease fee is for those stocks. You've got to execute the trade. You've got to then return the stock at some time. So what are the other risks involved in trading futures? Trading hours is one of them. Out of hours events are a problem. Some years ago, and I'm going to say 4 or 5, but I may be wrong, we were in crude oil, short. In a short, we sold a position, or many, and we had a buy order to be executed at the high of Friday's bar on Monday. Well, on Saturday, it may have been Sunday, the Houthis, who are a Muslim group at the south of Saudi Arabia, fronting onto the Red Sea, they fired a whole lot of missiles at Saudi Arabia's biggest petroleum refining plant. And that was on a weekend when the markets were closed. When the markets opened on Monday morning, the market just gapped way up. And because of the stop limit orders that the CME made compulsory, you didn't get filled, but you did get your margin call. It was horrible. And there are a lot of people as a result of that and the other similar issues who won't hold a position over the weekend. And their thinking is, and I concur, liquid markets that are trading are safe markets, whatever they're doing, up or down, by far one way or the other, doesn't matter. It's the liquidity issue that makes that sort of trading safe, because your stop loss, if you're any sort of a trader at all, you determine your stop loss. In Danielcode, I say there's never an order without the stop loss. And you make that decision, you put your stop loss in the market. Stop losses in your head don't count. They really, really don't. I can remember years ago, I'm talking about towards the end of the crash in 2000, Paul Volcker was the governor of the Federal Reserve, and the market was going down. This was after the dot-com top and the dot-com crash, really. And I had a group of young guys who were brokers or clerks of some sort working at a brokerage firm in America that I was doing business with. And one of them very politely came along and said, "We've been watching your trades and admiring your work. Could we trade along with you?" And I said, "I don't know what that means. Are you putting up some money?" "Well, yes, we are, but for ourselves personally, it just means we're going to copy your trades with your approval." I said, "Well, that's very kind, because anyone can do that without asking my approval. It's like chewy on your boot get nicked, isn't it?" So here Toddy's saying, "Future would not cover the PFG." No, that's right, but we got most of the money back. You put me off what I was thinking about. Do forgive me. And let's go back over here. I pressed the button. I should finish what I'm talking about. Liquidity is an issue. Solvency is an issue. Equal opportunity. With lit and unlit exchanges, you're not always getting equal opportunity. It's not the sort of thing that regulators, in my view, should have approved. But it doesn't really matter what my view is. It's simply a matter of what the regulators decided and they have decided that. So that's one of the risks there, but it's not a significant risk. So what is safe is trading futures with Danielcode, because we have a strategy that covers every single bar in every single market that you can think of that we cover. And you'll see this in lessons 1 and 2 in our new Teach Yourself to Trade video series that's introduced last year, I think, and the prices were made very much cheaper than the one-on-one lessons with me personally, which we call Masterclass. And in lessons 1 and 2, that will teach you about the Danielcode ratios and the price targets. And this concept of price targets is very, very important. If you go to the website and click on the link that says Chart Archive, you'll see over 40,000 charts of Danielcode members charts that I've created personally since the website went public in late 2007. And you'll be hard-pressed to find a market that's ever turned anywhere without having target recognition beforehand. And sometimes to you it won't be obvious. In this case, you can see this is the British pound, Japanese yen pair. That target recognition came at the bar before the high. So if you're just looking at the high, you may not see it. Target recognition is valid at the bar high or the bar low or on the close. And have a look, we have a sell signal there right at the high. That was a TO3 plus sell signal. Down it's gone, 3 bars straight down. Look at its low today, right at the blue line at 195,366. And you'll learn that in lessons 1 and 2. This is the euro yen pair. Have a look what this thing's doing. It found the blue line 1, 2, 3, 4 days ago, and it's just been hammering. It's either hit at the high or the close or the open in 4 days. It's just found that number pretty well exactly, as you know, within a handful of ticks. Quite extraordinary, and it does that all the time. This is crude oil. You can see it had target recognition, then a little down day, then that big gap up day that started the run down. But your target recognition was there 2 days before. So you had this massive down bar and then a smaller down bar. And everyone who doesn't know Danielcode said, oh, look at that, isn't that amazing? Well, if you understood Danielcode and you were watching the members charts, which you should be, it went almost exactly to the 6402 number. 2 tick variance was all in those massive 2 big bars that have gone from 78.50 all the way down to 6402. Incredible. 2 tick variance. How often does that happen? All the time. Target recognition is a vital part of Danielcode, and it's a vital reason that markets turn. Let me move on. S&P, have a look at this. Here's today's high. Plenty of volatility and excitement. 2 ticks variance at the high. What about yesterday? 2 ticks variance at the close. And we were up in the 6,000 number. 0.1% is now something like 6 points. I mean, it's huge, but the market continues working a handful of ticks. Nothing has changed since I first propagated that members charts back in late 2007 when we first released Danielcode. Markets are still working to that very, very tight specificity that it did then. It finds these numbers, all markets find these Danielcode numbers with an extraordinary degree of precision, and there is virtually no turn without prior Danielcode target recognition. That should have you scrambling, folks, for lessons 1 and 2. It is so obvious. I show this to you every time I do a webinar, which is twice a month. Chart after chart after chart, target recognition. That's what markets do, and hardly anyone knows about it. Danielcode is a very small business with a very small number of clients. We're the only ones who know about this. Unfortunately, some of you, as my clients, are not keeping your eye enough on the members charts. They're vital. we move on from that. Lesson number 3 will show you 3 different methods of determining trend, and it shows you about gaps, the concept of true highs and true lows. It's not really terribly well known. I've put a couple of pointers on here. I've missed a couple of them. I've just put the most obvious ones on. And you can see what happens. Look at the second gap arrow from the left. There's a big gap down from that bar, and all the unwashed, the great unwashed, sold that inside bar. Down they go, and they've got no idea of what's really happening. But where you have gaps, the rule says that if the chart low, that's the number you get when you put your cursor on that bar, if the chart low is greater than the previous day's close, which it is here, that's why you've got a gap, then the true low is the previous day's close. Incredible, isn't it? You can go on to the next one over towards the right-hand side, and not the last one on the page, the one before it, and you can see there's a gap there. And the day immediately after that one is also a significant gap down. And there, the great unwashed bought the gap. They don't understand true highs and true lows. And the market stayed there just long enough for them to all get filled, and then chop their head off the next day. You have to know some of this market law and some of this market mechanics, and the people don't really know that. Lesson number 3 of the TTT course will teach you that. Lesson number 4 is trading time signals. This is a chart I've shown you many times. This is a chart of 2 years and 7 months of gold. That's as much as I could crunch in to one page, almost 3 years. And what it shows you running along the bottom, that's a Danielcode time cycle. And in fact, it's a 29-day time cycle. And what we're interested in with time cycles is when they're at their high. So when the blue line is as high as it can go, it's at 100. When the red line is as high as it can go, it's at 100. And when these time cycles are at 100, the probability is you're going to get a turn. This is creating and trading time signals. Have a look at all these turns here. What we can say is that not every turn, but every turn of any significance has come at the expiration of a Danielcode time cycle. So for our trading, we don't trade a 29-day cycle. Incidentally, one of our clients, Cedric, who's an associate director at the Swiss Central Bank, he trades, he did a tutorial with me. We got to this stage, he said, stop, don't tell me anymore. This is what I've been looking for all my life. He trades markets off the 29-day Danielcode charts just the way I taught him. And he's a very, very conservative guy, and he just loves it. Just loves it. He's a lovely guy too. So there is the opportunity to create and trade time signals, remembering time is stronger than price. And of course, we don't trade 29-day cycles, at least I don't. A few of our clients do. We trade much shorter time cycles. And those of you who've done the course know trading time cycles, creating and trading time cycles is absolutely deadly. So then we come to Beyond Masterclass lesson number 5. What I'm trying to show you here is we have a strategy for every single bar on any chart you can think of. Every single bar creates a Danielcode order and a Danielcode stop loss management order. Both entry, exit, and protective stops all go together on every single bar. This is a chart I've been showing you for the last few months, and it hasn't created much interest, but it should, because we're talking about momentum bars, which come from the Beyond Masterclass lesson. And what you can see here is where there's no pink shading on it, there are no momentum bars. And when there are no momentum bars, markets consolidate, or they fail to break out. And by consolidated, what I mean is they keep turning around and closing inside the range. They elect a buy signal, turn around, close in the range. Elect the sell signal, turn around, close in the range. Now, when you have a look at lesson 6, which is so new, I haven't even written it up on the spec sheet yet, but I will tomorrow, God willing, is that where there are no momentum bars, there is no opportunity for a winning exit, because these signals are getting elected and then they dive straight back in, and it's horrible. And these sorts of consolidation are worse than is presented in the literature. The literature generally says, oh, they're in a state of consolidation, they're building up strength, they can't rally. That's not true. Pretty well everything you hear about traditional methods of trading is not true. This is day trading, folks, which is the last lesson I've just completed for you, lesson number 6. And this is one of 3 parts. There are 3 separate strategies in this lesson. And the third one is called trading with angles. And you've seen this chart before, or something like this chart. What you haven't seen is what it actually means beyond the obvious. So we can see the obvious and say, look how this thing is moving to capture the highs and lows. That's obvious. What's actually happening inside is not telling you. The lesson does tell you. Let's look at a bit more. This is a chart that I've taken straight off the TTT tutorial webinar. Have a look at this. This market's rallying and it breaks out of its existing channel and it starts to go up higher and higher. Now, a month ago and a number of times, many times over the years, I've shown you our famous long-term trading chart for UST bonds that runs from 1999 to date. And what I've shown there is that the high, the number of channels that it breaks out into, it has a reciprocal side on the other. This market is showing you exactly the same thing. It's accelerated its uptrend. It's gone all the way up to 7 channels up from the mean. And these are not standard deviations. These are Danielcode deviations. So if you do have this tool, no, it won't work for you. It works for us because we have special settings and special rules about it. But it's quite extraordinary. This is a 29-minute chart, folks, and you think it has no structure. Have a look at this. 7 channels up from the mean. What happens after that? 7 channels down from the mean. Why is that? Newton's law of motion. Any body in motion, every move will have an equal and opposite reaction. Newton's law of motion number 1 says an object hit by any sort of a force will continue in that direction in a straight line. Well, how do you turn markets into a straight line? Lesson number 6 will show you, and it's extraordinary stuff. I think I was telling someone yesterday, it might have been, it was Greg Palladini, I think, and he was asking me what was new and fabulous in the lesson 6. And I said to him, this thing started off being like our usual fare, 50 to 60 minutes, the recording for the tutorial. It finished up being 104 minutes because I used to be a day trader. I had years and years doing it. Trade everything down to 3 ticks. Madman's zone, but then again, as one of my fathers-in-law used to say, Tony McSweeney, wonderful guy, only a madman knows the joys of being mad. And I was a very serious short-term, very, very short-term trader for many years. And it's hard to conceive for most people that there are patterns and logic in the market that extend all the way down into day trading. All markets work the same. All of the stuff that you learn in the day trading tutorial works on 39-minute bars, 5-minute bars, 3-minute bars if you like, works on daily charts, 3-day charts, 6-day charts, all exactly the same. because all market moves are fractals of previous moves. Okay, that is market law. All market moves are fractals of previous moves. So we've got a little way to go, folks. I'm not rushing today. I know you've got tomorrow off, which is grand. So teach yourself to trade. That's our video series, and this is basically what it's about. And you can go to, we've got lesson number 6 is in this page. I haven't written up the specification in the letter that was the syllabus, if you like, that was attached to your invitation, but I will tomorrow. But if you just go to that link at the bottom, thedanielcode.com, display.php NAV equals TYT in capitals, you'll be able to see that syllabus on all of the Teach Yourself to Trade courses. So this is the comment from Greg Palladini, who's with us today, and Mark L., who's also with us today on the Danielcode Masterclass tutorial, which was the first real big breakout of trading time, creating and trading time, which is a wonderful thing. So what have we been doing with ourselves this week? Well, there's our S&P position. Have a look, like you saw on the previous chart, how it's just ticking off these Danielcode blue lines, one after the other, one after the other. Will I teach you the Danielcode blue lines? I don't generally teach them because they take so much work. In fact, I have people who do nothing else but do the mathematics involved in creating these new charts, which I then have to run through a couple of statistical tools to find the right numbers to put on. But these are the Danielcode members charts that are released twice a week, and sometimes more often if they need to be. We get a really big bar, I'll just do a new chart that day. But just look at the proficiency of this. And this trade, just straight up, 12,600 for one contract. This is gold. Excuse me. This again is the membered chart. And what I wanted to show you is even when this market is fluffing about, Danielcode time signals have got it tabbed. You get target recognition at the 3264 number almost perfectly, and it creates a TO3 buy signal, and it goes up to the red line retracement. That's 74% retracement, and that creates a TO3 sell signal, which we're in today. Not much value on it, but I'm not showing you for that reason. I'm showing you how even when the market has no dominant trend, this is just a minor correction at the moment, the Danielcode time signals get it all, every single bar. This is our trade in copper today, TO3 buy signal. It's up about $5,000. Pretty nice. This is the NASDAQ. The TO3 buy signal right at that recent low. It went up $13,000, hit the blue line. That set up a TO3 and the blue line sell signal. That's our strongest signal. But in a strong trend, in this case it's a mighty trend, it will run straight through that, which is why we keep following it. You get a one-day bar reversal, then a TO3 plus signal, which led us to get long again into today's bar. Here's the Russell, much the same thing, up, up, up and up. And the previous bar, not today's bar, the previous bar has got perfect target recognition, hasn't it? At around 2248 at the high. Close within a couple of handfuls of ticks. Today's high, no mark, no acknowledgement of the time cycles, of the time targets, I should say, but they're there. Okay, we had target recognition yesterday. Here's beans, same sort of thing, nice sell signal straight down, a little bit of an up, down, then into a TO3 plus buy signal. I've missed out the plus there, and we got long again into today's close. Here's silver, much the same thing, no real drama about it, TO3 plus buy signal. This is the third day up, it's made about 2,900. This is wheat, which has been absolutely magnificent. You had a TO3 buy signal 2 swings ago, straight up into the key reversal bar, and the bar before that, the big bar, all the volatility going roaring up to that 591 correct 2 number, that created a TO3 and I think it's also a blue line sell signal, but certainly a TO3 sell signal. What happens the next day? Turns around, dives straight down. 1500 going up, 1800 going down, little rally now, 500 odd. Smaller market, just as good, and a very, very good trading market. Something you guys, if you're starting out and you're trading, do think of trading grains and T-bonds in preference to the S&P. S&P is a very complex market at most times. This is US T-bonds, and it's been getting forced up by the PPT, what do we call it? The CPT, the Crash Protection Team, which is a fallacy, industry meme, but in fact parts of it are very, very true. The government has been supporting this market. At its low, you got a couple of really bogus up signals, and they managed to keep it running. The quality of that rally has been pathetic. This market should have a reaction in a fairly big way in the not so distant future. Okay, so guys, I hope I've made the point to you, and some of you be aware, the guys who are with us regularly will be aware that we've had some guys have some fabulous results trading crypto with Danielcode. But trading crypto futures mostly, and Forex with the Danielcode, these are your real money machine. And we've gone into some depth about the pros and cons of each. So that's bringing us to the end. If you haven't already had a free trial, folks, or you have any friends who are interested in trading, here we are, thanks Mike, Plunge Protection Team, the PPT, we know all about that, don't we? Here we are, you need to drop. Got a few quotes coming, a few people posting here, I'll get back to them in 1 second. If you haven't already, please help yourself to a free trial. If you have a friend who's interested in trading, please invite them to help themselves to a free trial. Just click the link on the home page, follow the prompts, you'll be fine. If you've already had a free trial, the machine, which is not a money machine, it's just a keeping score machine, a computer, it is going to be mean and say you can't have another one. That's not right. Contact Terry at support at the Danielcode, and he will assist you with it. Finally, this is our disclaimer, risk disclosure, etc. Trading involves risk. Do not risk real money until you are absolutely sure that you are a competent trader. And the quickest way to become confident is take a Danielcode tutorial, and I will teach you all about that. Okay, let's have a look at these guys talking to me about. Here we are. So, Jim's gone. Need to drop off. Great session. Okay, it's gone. We got that. Mike gave me the Plunge Protection Team. Let me see who else is posting here. Huh. So this is from Justin. He's a very, very clever young gentleman, a great friend of mine. I've known the family for years and years, and he does a lot of the analysis. He's the world's champion backtester. He's backtested over 100 years of various markets with Danielcode. Have a look at the homepage of the website, folks. Video number 2 and 4 are from Justin. They're really, really worth watching. Here is Justin. Hi, John. Been live trading time signals for a couple of months now. Can confirm that so far the live results and performance metrics have almost perfectly matched the overall paper trading results. How about this, guys? We have a lot of smarties say, oh, paper trading's not the same. Here's Justin, who's the most detail-oriented guy you can ever meet, and he's saying his real-time trading with real money had almost perfectly matched the results of the paper trading, and performance metrics almost perfectly matched the overall paper trading result. So paper trading time signals should be a pretty good indicator of what to expect. Plunge into your pool with a Bloody Mary and enjoy your weekend. Hey, that last bit from Mike. Okay, mate of mine is over in New Zealand. Yeah, thanks, guys. The pool's a little bit cool at the moment, Mike. So I'm actually start the plunging probably late August, but by then we will have had a significant event in futures markets, which I warned you about not so long ago, and I'll focus more on it as time moves on. So thank you all of you who've been with us. Rolf just joined us. Welcome, Rolf. Grand to have you with us. All the guys I've greeted and said hello to. It's wonderful to have you with us. Look at so many of you still with us. Wonderful. George Tars just arrived, and a number of others. How great to have you all here, guys. That is just so wonderful to see you still here. Thank you. Enjoy your weekend. All you guys in the States, happy Independence Day. Be as bad as you can. Be safe, and come back when the trading starts again next week. For now, it's bye-bye from me. Bye.